Hello and welcome to the quarterly market update for 30 June 2021. My name is Sam Hunt. I'm a director of War Hunt and also the head of investments. And today I'm joined by Dr. Steve Garth, an independent member of the War Hunt Investment Committee. Steve, it's been a really interesting end to the financial year as we've seen sort of the rollout of vaccines worldwide and expansive sort of monetary policy to support what's the impact of the pandemic. Just wondering if you could share some of your thoughts or what you're seeing as to what the impact has been worldwide on markets.
Well, let's just have a look at the Australian market first of all. This is the ASX 300. And you can see that it's just reached new highs on June the 30th. And in fact, the Australian market has recovered from its pre-pandemic highs. It's made that recovery in only 14 months. The other thing that I think has been really defining in the quarter, which some of the listeners have probably heard about, is a lot of talk around inflation. But what you can see in this quarter, Sam, are those yields have been coming back down from where they were. And that's an indication that the market now thinks that inflation actually is not going to be that bad.
So Steve, with that sort of background and context, what's been the outcome for markets both domestically and globally?
In the quarter, the ASX is up just over 8%, but as I mentioned, it's up 28% for the year. And when you look at the global markets and the emerging markets, they're also up from anywhere between 27 to 30% for the year. The two bars on the right are the REITs, the Australian REITs, they're the real estate investment trusts, and the global REITs. And you can see that they're the best performers. Now, that's not really a surprise because, of course, they were battered down the most during the pandemic.
Now, Steve, before we have a look at the premiums that we target with our portfolios, it's probably just worth doing a quick recap on our investment philosophy or the premiums that we target. Sort of in simple terms, equities have a higher expected return than bonds and cash. In equity markets, small companies, as sort of defined by market capitalization, and value companies, as defined by sort of book to market, have a higher expected return than large companies or growth companies, respectively. So that's what we target within the equity components or the premiums that we focus on within our portfolios. So, Steve, with that in mind, how have those premiums, sort of the equity premium, the value premium, and small premium performs across the board domestically and internationally?
Yes, well, first of all, talking to the equity premium, which is really what we've been speaking to, Sam, that of course in Australia, market's up 28%. When we look at the small cap premium though, that is really strong. Look at this chart, Sam. It shows you the small company premium Australia. So those small companies have done 13% better than large companies. And you also see with the value companies in Australia, very strong value premium there over the year. If we go to the global markets now, and again, on the left-hand side, we see a very strong small company premium. So around the world, small companies have done better than large companies. So that's really played into the War Hunt portfolios. And of course, Sam, we should always say that while we expect these premiums in the long run, we know that they don't exist in every single period.
That's right, Steve. That really talks to our philosophy around diversification, that we know those premiums are there in the long term, but we don't know when and where, and hence why we sort of wait towards them, both domestically and internationally, to pick them up when they are there for the portfolios. And we're certainly, looking at the returns now for clients, are seeing that across the board that we are getting outperformance against benchmark, which is terrific. Well, it's probably in summary, there's obviously strong returns across the board, which is terrific, which is great outcomes for all our clients' portfolios. We thank you for attending today and look forward to catching up with you for your annual planning meetings. And at any point in time, please don't hesitate to reach out to your advisor to discuss your goals and objectives or how the latest returns have sort of impacted on your plans. So thank you again for your attendance, and we look forward to meeting with you soon.